Hey traders, Nick Shaheen here looking at Netflix the day after the disaster. Okay, so the stock down, what is it, 11, 12% at one point. Um, so some disclosures. First of all, at the end, there's a pop-up on the top left. Subscribe to this channel on YouTube. It's free. I post videos all the time. This way you get notified. Also, link down below probably will pop up for a chat room hookup. Tons of fun. Okay, so as far as Netflix is concerned, I'm not a hater and I'm not an Uber fan. I'm not a subscriber either. So I trade it based on levels and whatever fundamentals I think it has. So fundamentally speaking, it's not ideal. They spend too much money. They burn too much cash. They pay too much for their content. All these were part of the bullish thesis that I had in it. And Wall Street gave it a pass based on the fact that they can grow, and more importantly, grow overseas. So when I'm evaluating a growth company, I don't really care as much about the bottom line than the top line. And in this case, they gave it a pass on the bottom line because of the growth overseas with signups. So last night when I was talking to friends, I said nothing matters except one number: overseas growth, subscribers, paid subscribers, and it was a disaster. They missed it by a mile. It was a lot lower than last year this time. I think 2.7 now versus 5.5 million last year. More importantly, versus 5 million expected. So they completely demolished their only ace in the hand. So as soon as I saw that, I was like, uh-oh, here we go. So where does it go? This was a downside scenario target that I had from a while back, and I didn't arbitrarily pick it. It's this one. I had an inverse head and shoulder, the green stuff, that had a huge upside target, but there was a trigger, and it started doing it, and then it hit this level here, and then I said, okay, this is where I book profits if I entered here based on this breakout, just because this is a ledge. This is the October disaster. Now the stock market completely erased the October disaster, and Netflix is still struggling with it. So I posted notes and videos before, hey, huge upside potential if they can cross this line. So this was ongoing. Now this is foiled for now. This still is the trigger up, but I doubt this will happen. So why? Because the overall picture changed. So now we have to wait 3 months to see if they're going to blow it out of the water next time and regain that ace in the hand. You know what this reminds me of? Chipotle. Obviously the other one had dire consequences because people got sick, but the same thing. Chipotle stock before, when it was like 700 and whatever the first time around, people gave it the pass because it was turning comps like you wouldn't believe. And once they had that bad burrito issue, then the comps disappeared. So their ace in the hole disappeared. So then it took it up until now, years later, to recover. So Netflix is at that point. It lost its ace. Next quarter will guarantee if it did or didn't. And if indeed did, that stock will go below $200. I don't know when, but the valuation is terrible from that perspective. So it's not that I'm judging it. I'm telling you what Wall Street will do. If I'm an investor, investors will have to look at it differently. It happened to Goose to some level recently, Canada Goose. So here's the weekly chart. Showed great, tremendous. This is the same line I shared. This is the white line I thought would be the target. This is a big candle. So maybe you can play around with levels, short-term trading, bounce, no bounce, whatever. Maybe. Not with my money, but if I see something obvious, I'll jump on it. As far as levels are concerned, 300 is not only psychological level, but it's also a pivot point from somewhere on. Let's see here. Let me see if I can mark it up for us. So I'm going to bring a scratch pad. Oh, I was working on Tesla. Booked some profits for 3 reasons. They're on there. Anyway, what? Wait. Wrong one. Okay, new page. There we go. All right, so this is weekly again. This was the target I had for it. Here it is, right on it. And this was the past bounce level. So bounce, maybe. And if I'm in trouble and this bounce helps me, I get out or I fix it. This will be a level I look at where there will be resistance if they bounce, okay? Because they might do this and then come back to this same point again, as here. And if they don't bounce this time, they go down to here. Why here? This is just another pivot point. what is here? Oh, 300, perfect. The 300 round number. Another level to look at is somewhere around here. Why? Because of this candle right here, this candle right here. So to me, 200, I'm going to eyeball 65-ish. This will be another level to look for. I'm not calling it's going down there. These are stopping points. Okay, so, and obviously this zone right here, which is this giant candle, whatever happened here on this earnings. So there are levels to play around with, but the ace in the hole of the Netflix story is gone for now. And they need at least 3 months to recover, and they better blow it out of the water next time, or it's really gone, and these will come into play. So what happens today? Tons of people are going to say this and that. They need to do the competition or competition. It doesn't matter. There's plenty of competition to go around. Disney didn't do this. Nobody's going to not sign up for Netflix because Disney's coming. It's different audience. No, but yes, they do have competition. I've been saying that for years. But Reed Hastings doesn't hear it. He thinks he's competing with Sleep and a game, Fortnite. I think he's delusional on that point. There is competition, just not from Disney, but from everybody. Everybody offers their own streaming. So apparently the company I dislike the most, Roku, is winning because they're an aggregator. They don't care who's providing for now. Their model, I think, is just, hey, let me get you all of these and bundle them up for you. So they're basically the old cable company, only with the streaming process. So for Netflix, the story is still the same. They're trying to do great content to attract as many people as possible. The only problem is they're doing it at a huge expense. They're going to have to change something. And it can still continue, but there's going to be a reset. So they have 3 months to fix it. And if they can come back with overseas growth as far as subscribers the way they were supposed to, then maybe people will look the other way. But a lot of pundits are going to give you reasons to buy it, reasons to sell it. Just trade it one level at a time. If it bounces, this is where you get out or lighten up. If it bounces and then comes to here, this is maybe I short a little bit to see if it gets to this one. So use these levels to manage. Again, they are eyeball. You can see them there. Maybe I can get smarter with that eyeball. What did we say here? Okay, so it's one level at a time. It all depends on personal preference. Some people can take Little Red more than others. I'm on the conservative side, so I don't like to guess. I like to do some really good level of finding good levels, and this will be one right there. This zone right here, 278, 280 would be of interest. Obviously, the round number 300 because of this bunch here, and then this bunch here, and then this bunch there. Markets have memory. People say, now the belief is that there's more machines trading than people. Well, machines do repetitive things. They program them to do this at that point and this at that point. So repetitive things bring back support levels and resistance levels as we can see them. So tons of ideas. The only thing that matters is growth of subscribers overseas. That's the only reason they had to pass on valuation. And their valuation is horrendous. Let me see here. I think this is live, so it should adjust the numbers. 10 times full year sales, earnings PE 190. So I don't know, price to book 30, maybe arbitrary there because it has a lot of off book stuff there. Anyway, it's an expensive stock and it's going to get rejiggered that way. All right, Nick signing out.